Investors and traders, welcome to the channel Market Chart Pattern. Today is 25th of May 2024. Hope everyone is having a great weekend, and for our American fellows, uh, hopefully you'll have a great long weekend. Okay, so in this video segment, we'll be taking a look at the financial sectors in the United States and the key US banking stocks. As always, this video is for educational purposes only, and it is not a financial advice. So we'll start by taking a look at the XLF, which is Spider Select Sector Fund for the financials. But here I would want to actually draw your attention to that, when selecting the ETFs, the investors should actually do some research and actually look at what are the constituents of the ETF. So if you were to take a look at what sort of companies are part of the XLF, this is coming from the finviz.com, and we can see that the part of XLF is Berkshire Hathaway. In fact, it's 12.99%, and JP Morgan 10%, and Visa, which is used for transactions, it's 7.63%, and MasterCard 6.55%. These are commercial services, and it's interesting. I'm not sure whether Visa and MasterCard are banks, but for sure they are part of the financial system because of the transactions that go through them. And we have the American Express as well, but quite a small portion of it. And then Bank of America, Wells Fargo, Goldman Sachs, S&P Global is part of it, and Morgan Stanley. So when we take a look at the individual stocks, we cover a lot of them. We cover JP Morgan, we cover Goldman Sachs, Wells Fargo, Bank of America, Morgan Stanley. American Express is something which I'm going to include from today. It was not covered before, so we'll start to do that. So just want you to be very careful. The reason is that if we look at the XLF and its performance, and we were to compare it with some of the other financial ETFs out there, so I'll just quickly show you this one. KBWB is also Invesco KBW Bank ETF. Its performance is just nowhere near, and the reason is that it also contains the kind of smaller regional banks, and it's actually chart looks very similar to the KRE, which is what we have been following for the small regional banks. So while we are at it, we'll just start by taking a look at the KRE, which is the Spider S&P Regional Banking ETF. And what we can see is last week this has actually come a little bit under pressure as markets hold off, especially on Thursday. And let's draw a little trend line right here. It also broke below the trend line, so it looks like it wants to retrace. Possible support region would be around the 200-day moving average. But the interesting thing is it was able to take these highs out, and I believe it just went to the 61.8% retracement of this entire high. Yeah, there we go. And here it found resistance. If we take a look at this on the weekly chart, so we can see that it has been range bound for a long time. The interesting part is it was not breaking below this trend line, and also the 50% retracement. So we do have a pattern which could actually see this move quite a bit higher, but the momentum needs to remain positive. So the price is really sitting at the 20-week moving average, is below the 200-week moving average. So ideally we want to see the price above the 200-week moving average. So there is some improvement that needs to be done, but nonetheless, if this support is held, yeah, the pattern is there. Whether it will get there, we'll have to wait and see, or it just might just chop around in more sideways action for quite some time. Now let's take a look at the XLF. So the XLF, last week, a bit of a rough week for XLF. We were really thinking that it should go and hit the 43 level because that's the 1.272 expansion, and the week before it did look like it wants to go there because breaking above the highs of this one, and of course it has cleared these the resistance, the structural resistance, for a possible double top around here. So shorter term we were looking for 43, and now it is the price is still above the 20-week moving average, is way above the 200-week moving average. So the momentum is fantastic. And if we just look at how much it has retraced by, looks like it's at 38.2%. Yep, it has done that. So that could be a pretty good support level. Okay, I'm going to remove this one, and I'm also going to remove this one to make things a little bit more clear. So this is the weekly chart. Now, let's take a look at the American Express. Okay, so here I'm actually going to directly take you guys to the monthly chart. So this is the first time in this video segment I believe we are looking at American Express. And here what we are going to do is I have actually chosen the log scale, and we will review really long-term cycles operating in the American Express stock. So I think it had an IPO in 1972 perhaps. That's when this is as far as we can go in terms of the data on a trading view. And it had a low come in around 1974. I believe that's when the bear market was ending. And here, one of the key things is that look at this trend line. If we just draw this, this point 1, point 2, and this is the point 3, which came in February or March of 2009, bottom of the great financial crisis. And this trend line is still intact. So this is the key thing, that even during the 2020 pandemic, it look, it's just been going up from the left hand corner of the screen to the right hand corner, upper corner. So that's pretty fascinating, the kind of long term trend that exists in this stock. Now what we also see is, if you look at this black line here, that's one ABCD. So it's really starting from the bottom of November 1974, October, November. And if we just do an ABCD, it just takes us to this high, which came in around 2000. So several years later, in fact, a decade later from this point C in 1990. So the ABCD is, the high is a little bit lower. It went a little bit higher, but not too much. And then we have had a bit of a correction, and here we go, and we had a rally. This is bottoming around 2002, late 2002, a rally into May, June, July of 2007, and then the great financial crisis. It had a bigger low put in place. Now, looking at this log chart, all this run from the late 2002 to 2007, June, July, August. Seems like maybe it was some sort of a corrective structure, possibly, although the price was moving higher with respect to these bigger cycles behind it, because it also finished right at the 1.272 expansion and it's rolled over. So if we take another cycle, which is in the red, so let's call it point A, and point B being this top here, and we just project this from point C. uh, we do get a projection of to about $475 for this stock. So we'll have to wait and see whether or how long it could take for the stock to get there, if it will get there. And then we have a smaller ABCD in the purple, which is also around the same level, coming to the same price level. And we have this smaller black labeled ABCD around here. And when it was achieved, the market actually went a little bit sideways. It's a really long-term monthly chart, right? So pretty interesting to see the kind of cycles operating here, but looks like if it reached to about 475, that's going to be a pretty big cycle that would have come in, because it will be a really big top from a low put in place in 1974 till the low, and then the being projected from the point C, which came in March of 2009. So it'll be really interesting to see. Now this is really long-term stuff that we are talking about. Moving down to the weekly chart, what we see is that the price has reached the 1.618 expansion of this swing. This is the 2002 bear market. Here we go, finished in October of 2022. Now some sort of a pullback is to be expected, maybe right to the 20 week moving average. Momentum looks pretty good. The reason is price is above 20 period moving average, which is above 200 period moving average. Possibility of course exists that if there is going to be some sort of a pullback, it could may come back to as low as 205, and the structural low is around 200. So that's going to be a fair amount of pullback, but pretty normal, just 38.2% retracement of this leg lower, finishing in October 2023 to here. And then we have an ABCD, which is the one-to-one price projection from the low put in the pandemic low of March of 2020 to the highs of 14th of February 2022 week, being projected from the lows which got put in October 2022. That actually takes us a little bit higher. So we are in a zone, about $20 zone, that we should be really watching for a possible some level of top to come in, and then perhaps a pullback. If it just blasts through these levels, then of course the cycle is getting extended. So on the daily chart we see something similar. Here we go. Now this rally that started from the beginning of 2024, we have this nice trend line here. That's the 1.27, excuse me, 1.618 expansion that we saw on the weekly chart. And I think if it just closes below the trend line, then it'll be a sign that we are perhaps going in that pullback. Maybe that could go up to 38.2% retracement, as we have seen it on the weekly charts. Okay, now let's take a look at the Goldman Sachs, and I'm gonna go to the weekly chart. Here we go. So Goldman, as you know, has had a fantastic run, and it's just gone right into the target that we're looking for. That's around 466 to 473. That's the 1.272 expansion of this entire swing, and then the 1.618 price projection. So the CD leg actually extended. So since we have a confluence of two ratios coming together, this is something we pay close attention to. So it could be a stronger resistance level, and then the market could perhaps pull back from here. We have already seen 1 week with a negative close, so we'll just be watching this level really carefully. And then if we take a look at JP Morgan. JP Morgan completed its big ABCD a few weeks ago. We had a pullback. We were thinking maybe it could get down to 175, where we also have the 38.2% retracement of this swing, this low to this high. And then the concept of bearish symmetry could actually also take it. We could actually see it there. Did not happen exactly, but came pretty close. And then we have had a nice rally higher. We were thinking maybe it could go as high as 216, which is the 1.618 expansion of the swing BC. So last week we have seen some selling pressure come into this. Here we go, and it went right to the 1.272 expansion, really close by, but still a possibility that we could see a move a little bit higher to about 214, 216, which would be a stronger resistance level in my opinion. And now let's take a look at the Citigroup. This is the weekly chart for Citigroup. This stock is not nearly as strong as the two stocks that we had a look at, three stocks, including the American Express. And then it's just, I think the 61.8% retracement might be pretty strong resistance for this one. So nothing exciting about this stock, unfortunately. And then let's take a look at Bank of America. This is actually one of our favorite banking stocks. We have done, beginning of the year, did a long video about the longer term cycles that are operating here. So please look that up on the channel. Is going to be really informative and good educational value in my opinion. So we are looking for this stock to creep up to this $40 per share level, where we have the 61.8% retracement coming of this swing high to low, and then we have these ABCDs completing nearby. So it could also be a strong resistance level where we can see some profit taking happen, or some pullback could also be expected. Then let's take a look at Wells Fargo. Weekly chart of Wells Fargo. So it's gone right into the zone that we had been watching for, and that's the gap. It's just gone and filled this gap, and we have this time symmetry coming in here. So we just take this high to this high. This is a little bit arbitrary because there was a fair amount of consolidation. I could have actually drawn it a little bit further, and then if we project it, then we get into the same time scale as well. So now the key thing is, maybe it just pulls back a little bit, come back into test the 20 period moving average. Interesting thing is that it long time ago it just broke above this. It's a bearish symmetry. There were several of these. Whenever the stock was. So let me actually show you what I mean. Whenever the stock was rallying about this much, this much, this much, it was always getting sold off, and that kind of stopped happening in this leg. Right here, and then we had a fantastic move higher. So there's a possibility this could actually be moving in an ABCD, could be, and could go much higher, taking out these all-time highs. But it needs to get through a fair amount of resistance, which is just hanging around here because of this gap which has gone and filled. So we'll just keep on watching how the price action is going to unfold in Wells Fargo. Let's take a look at Morgan Stanley. This is the weekly chart for Morgan Stanley. Morgan Stanley stock broke above 78.6% resistance. And looks like it's forming a double top. A nice looking candle, but closed ugly. Let's see what's gonna be the follow through. We have seen something like this around here. So if it's gonna be an ugly follow through, then it's coming back into the range right around the 20-week moving average. But it was interesting to see that it broke above the 78.6% retracement with quite a lot of power gust here. But maybe the structural resistance might be a little bit too much for it. So just really watching this one. Overall in the financials, last week was where there was some selling pressure that had come in. And if we were to just look at some retracement right from here, from altogether all of this, yeah, it's also at the 78.6% retracement as well from let me actually draw this high to this high. But the key for us was breaking above this 78.6% retracement, because that means it could actually be an ABCD higher, which could actually go and test these all-time highs. So this. So that still remains a possibility. Okay, now just thinking about if I have missed anything. I think we have covered all the stocks that we usually cover in this video segment. So thank you very much for watching the video. If you found the video of educational value, please give it a thumbs up. And if you like the way we do the analysis here, a technical analysis using Fibonacci uh, ratios, extensions, expansions, projections, and also pattern recognition, then please do subscribe to the channel. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.